Hi, thanks everybody for joining. Listen, there's been a lot of our feedback from our account managers and our team. We know how snowed under you are. It's been an absolutely crazy year. But we also know that you sometimes, don't prioritize your own business because you're so focused on your clients. So, I know it's a really bold, thing to make this webinar about, but what does happen if 20% of your clients, are on a downward trajectory like this, and now or next year? We all know that the economy, I'm sure you've all seen the news, the economy grew by 15% July to September, but it's nowhere near what it was like. I don't need to tell you this. I'm preaching to the converted regarding understanding financial and fiscal information. But there are also, the Simply Business research said that they reckon from 20% at least of small businesses are not going to make it through this next lockdown. It's going to be more. We know the amount of debt that's there, the furlough scheme being extended. It's just, there's a lot still to come. So if you did lose 20% of your revenue and you couldn't replace it because the small businesses weren't there, what would you do? So that's what we wanted to do today. Hal, do you want to skip on to the next?
Yeah, no worries. And we really do want you to prioritize. I think, it's like anything. It's like builders. You look at a builder's bathroom, they've not finished it. You look at doctors who are determined to start their health kick, they don't get on with it because, of course, they prioritized everybody else. And I think we really want you guys to walk away from this session today prioritizing your own business first and getting your own ducks in a row. Although I did read an article last night, apparently that is like the most hated phrase that people keep referring to, but get your ducks in a row at home first. So look, where does the biggest risk actually lie? We talked about this slightly last week, but it does lie in those non-advisory clients. It's the clients that you don't work with on an advisory level, and therefore you don't hear from them. You don't know how they're doing, whether they're struggling. It's likely that, I guess, you're completely in the dark with them. You may well have tried to reach out to them, knowing that they could potentially be in trouble. I know of one firm who cleared his calendar when this first hit and said, right, everybody just book in, sent out an email saying, book in, I'll talk to you. But these clients are tough to engage with. They came to you for compliance only. They don't really know that you can help. They quite often have the perception that, of course, you are only there to help them and keep them in line with the HMRC. But they are the clients which are most at risk during this second lockdown. They are very unlikely to have a forecast. If they do, it's likely to be a sales forecast. It's really not going to be a cash flow forecast. Certainly it won't be a three-way cash flow forecast. It will simply be looking at, what do we hope we're going to get in, and then looking at the bank account. They also don't have internal finance teams. So they haven't got anyone advising them as to costs or expenditure that are maybe getting out of hand, or any trends that are clearly coming out of the numbers, or of course, warning them of any drastic downturns. And on that, this is the proportion of clients that will suffer from that very well-known disease called ostrich syndrome, where their heads are very much in the sand, just hoping for the best, battling their way through day to day, reactively working their own business. And of course, we've got this image, but they're very, very silently drowning. And the stats don't lie. Hannah talked about them before. There's stats that we all know, but it is, we've listed them again, but 20% of small businesses are predicted not to make it through this lockdown. We haven't made these numbers up. 66% of small businesses across all sectors are reporting cash flow impact as a result of COVID. 33% that they said that they'd be worst impacted in a second lockdown. Guess what? We're in a second lockdown. And of course, 62% don't feel confident about their long-term future. Now, if these clients are at risk, this is clearly going to put you at risk. But let's actually dig into just how much. And I guess back to you, Han, for this one.
Yes, I'm going to take over very, very quickly. So we sent out in the email, there's this calculator that we've put together. It's very light touch, but it's really good as an illustration for really calculating the risk of your portfolio. So does anybody want to volunteer with their figures? Probably not. But if you do, stick it in the chat box and we'll enter it in. So, but we did a webinar yesterday and this absolutely applied. And by the way, it applies over in Australia as well as the UK. It's completely global. Right, total clients. We've already got the calculator here, but the link to this is in the email that we sent out. Some of you have sent it back, and we're going to share the results of some of the results that we got emailed back yesterday in a second. But it works very simply. You've got 200 clients. What's your average annual fee? We have is very varying. So let's just we'll put £2,000.
I've got people who are willing to do this. Ooh, as long as we don't admit who they are. So
that's fine. Shout out the numbers.
So I've got a couple of people. I'll start with this one first. 180 clients. Now, this person is now going to have to quickly give me the average annual fee. I can't tell you who you are, so I'm hoping that you, excellent, £2,400.
Perfect, yeah. And what's the percentage of non-advisory clients?
Hold. 85.
85, so nearly that, right. And how many clients, if we say that, we're 25% of your clients could be at risk of those, it's £90,000 worth of revenue next year. Oh, it's a lot of money. I'm not going to belabor this because actually we've got more examples that I want to share now. Actually, Helen, we can zip back to you and you just go to that slide.
Say, the person who very, very bravely did that, thank you very much indeed, then responded with yikes.
Yeah, I mean, that's the thing. It's we are all guilty, us included, of working in and not on the business. And this, crikey, you guys have to do this because you're small businesses too in the main. And, but you do, and this is the exciting thing for you guys, you actually have an opportunity to prevent it. Not many other small businesses do.
Very, very quickly, we'll plug somebody else has sent us some further numbers, which we'll plug in at the end if we've still got time. So if anybody else does want us to do it live, then just keep sending them to us and we will do them. Let me just reshare my screen for a second. There we go. Because we did do this, and as I said, just keep them coming in, because actually we're collating so much information on this, and actually loads of you did it before this meeting today, so thank you very much. This is a teeny tiny snapshot of what we have received, but a little bit like the response then to yikes, the numbers are quite terrifying. I mean, some of the numbers.
And let's just draw, this final column. Yeah, it's astonishing.
It is. I mean, just to repeat, you saw the calculation in action then, but we've got some clients here. If we look at, just the top one, 130 clients, £1,000 annual fee, 130k turnover, of which 90% sit in non-advisory clients. There's a huge, from a business that's 130 turnover, there's £22,000 worth of that is risk. But scroll down, and some of the numbers get into 540,000, £500,000 a year of risk of revenue that is at risk. And that can be prevented. I think this is the key.
However, what do we hear? What are we going to hear? Go to the next slide, Helen, because what we're going to hear is, oh, but I haven't got enough time to do it. Okay, what was the quote that you said this morning about the time thing, Hal, to me?
Yeah, so time is a prioritization thing. The thing is, there's only ever going to be the same amount of hours in any day, and it's what we do with those hours is entirely up to us. And so it absolutely is just a prioritization. Mm-hmm. And I think what happened is that we're at the moment prioritizing your clients over the needs of your firm, and actually you do have to address it, and something has to give. And I think where you guys are making your firm give, that's what needs to change. It needs to be something else. It needs to not be your own firm or your own portfolio, because I know we do have portfolio managers on the call. It's not that should be the give. It should be something else, and you're going to have to identify what that something else is going to be, because we can't give you more hours.
No, exactly. On the no one to do it, we're gonna call BS on that one, and I'm going to be frank, but we are, but we'll come back to it in a little bit. Compliance is backing up, isn't it always? Mm-hmm. I mean, honestly, isn't it always? You're always, and we know that the government have changed. There's been so many things have added to your workload. We absolutely get that. We get that you're fried and frazzled, but that's not going to stop anytime soon. So taking a step back and taking one day, just a day with your entire team to take a break and go, right, let's look at our business first. Mm-hmm. That is what we're advocating for here, because when you look at the figures that we've just shared with you just now, it is terrifying. We're going to go into the cost side of things, and it's going to be too prohibitive. Well, it's not. It's absolutely not. And how are we going to do it? Well, that's going to be made clear. So we go to the next slide.
Well, I just think on the cost thing, I think you've got a really valid point in that, Han, because actually the cost of not doing it, I think, is far greater.
Exactly.
The cost of actually doing it. And it's just about prioritizing it, and the cost is a null and void conversation. Do you want to talk about headcount? I don't know where you want to talk about the.
Yeah, I just think so. So when the shock result, the middle £540,000 came through at an estimated percentage of clients at risk, could be more.
Well, I could actually this particular client as well, actually the 50%, I'm not even going to say whether it's a girl or a boy, they actually said it's probably higher than 50% at risk because of the types of clients that they do have. But he said, I'm going to put 50 in there. But I said, so what are you going to do about it? How are you going to tackle it? He said, we just haven't got the people.
Haven't got the time. Well, absolute rubbish. Hire a contractor, hire a temp. You know, prioritize your junior staff.
Yeah.
We're going to show you how quick and easy this is to actually, identify exactly who is at risk. So in one day you could, or in batches of 100 clients, you could certainly know in a day how many clients that you've got who are actually at risk.
I think I'm going to go to the next slide in a sec, because I want you to go to the process, Hannah, because I think I want everybody who's on this call to go into this recognizing that it's not on the partner or the client account manager's shoulders. Actually, this is something that can be picked up. It is so simple a process that we're going to take you through. It could be picked up by somebody who's just come into the business, that isn't trained, that doesn't know the clients, genuinely a temp, brought in, paid by the hour. You could get this done as you go into next week. So Han, do you want to just go through?
Yeah, I'm gonna. So this is how quick it is. We reckon it's going to be 5 or 6 minutes a client. That's it. That's all the time it's going to take to assess which ones you need to contact and shore up, because it is in your power, without any additional work, because Predict, and of course, our software is backing this up strongly. It's going to do the heavy work for you, but it will absolutely give you this tool to make sure that as many clients possible are shored up, that you're ahead of time plugging any cash flow needs if they've got them, that you're looking at cost savings, that you're looking at diversification, moving their business online, all of those different things. And those things can be projects. Remember, they're projects, but if they trust you because you've helped them in a way that they didn't know you could, because you're a compliance client, and please do not underestimate that. They don't know you can, because they've never been offered a different service like this, because it's not been possible before, because the software's not been here. So the connection piece, unbelievably simple. It's literally, I'll show you right now.
You can share.
Yeah, I'm going to share my screen. So there's a couple of things I'm going to do. I've got one screen up that is about how we create the predictions, and I think you have to trust us on this. You have to know why we're better. So that's my dog scratching itself in the corner. If you can hear a bell ringing, It is better than float. It is better than fluidly. I'm going out and I'm saying it, I'm being bold, because it's three-way, it's short-term and long-term, it's direct and indirect forecasting, it's a hybrid approach. And on top of that, it's got really blinking sophisticated algorithms that are looking at every single transaction type to make sure it can be as accurate as possible. It's not going to be 100%. What can? It's the future. However, based upon actual trends at the transaction level, it will do. So I'm just going to get rid of my face because I'm looking at myself here. Right, adding clients. Go to the settings section, adding a new organization, enter your organization's name here, choose the product, Predict, Xero. Okay, I'm happy. And guess what? It takes you up to a Xero. That's it. That is it. That is connecting a client. It is so simple. So export them from your practice manager. Let me just go back to where I was. Export your practice, from your practice manager or your systems, and then just get it in a list. Look, we've even prepared one here. I'm going to show you this now. You don't have to use this as the triaging list. You don't have to, but it's a starter for the data points that will give you a really, really simple, quick way to then, rank them, etc., etc. So the things that we're going to be looking at are, and the reason why I put connected to Predict is because if you've got your entire client list down here, you want to know whether, where you're up to or where that person's up to. Do they have any negative cash in the month? Does the red cash line go red? Where's the red cash line? Here. Does it go red? Yes. There would be a yes in here. So they have a problem. What's the cash at the end of December? Enter the number. What's the cash at the end of March? Enter the number. Is there any net sales trend? Is it going downward, up? It's pretty flat. Fine. Unpaid invoices. Where are the unpaid invoices? Over here. So this is the £7,797 would go in there. Unpaid bills, exactly the same. Right here, that's it on the data points. That's it. It's so quick. It's so simple. And we've said 5 minutes. That was probably less than a minute. If you do know if they've taken a bounce back, stick it in there. If you do know that they've taken a CBIL, stick it in there. And if you do know that they've put in VAT deferment, put it in there. And also, if you've got the details of that, make sure that it's not the settings, Hannah. No, head to the financials. And if they've got a deferred VAT payment, just whack it in, how much it is and when they're expected to pay it. This week or next, I don't know when it's coming, but we'll be able to split that over a 12-month period as well. So, because of course the government have changed their rules and we're moving with what they say. So what do we reckon? 2.5 minutes per client, something like that.
That's the bit which we think can be outsourced to a junior member of staff, or somebody who just you bring in just to do as an incomplete project, because it will give you that visibility.
Now, what I'm going to really quickly do is you have to be confident on why we're better. You have to. So I'm just going to run through this, and I know that all of this is quite small. The video is going to be shared. So what information are we pulling from Xero or Quickbooks? The reports endpoint. So profit and loss and balance sheet for every day. We go back. So all of the historical data is here. Goes back. You'll see a 12 months worth of information. However, if we can get 2 years worth, we do use that. So we use that for the trend analysis as well. You will also have, any adjustments to equity and currency gains and losses. Because we're pulling the reports for the opening balances, you will get all of that. So all of that data is there. Invoices, you've seen invoices. This is where this hybrid piece comes in, that indirect forecasting from profit and loss and balance sheet transactions, plus the invoices. That is why it is the most accurate and robust tool for short, medium, and long-term analysis. Journals. Accountants love a journal. Payroll relies on it, so we split out journals and we look at those separately. And then we also look for the bank transactions. All of these are the different API endpoints. Why? VAT payments. If we can detect that we think a VAT payment has happened or rebate, we will make sure that it adjusts, because we're telling you in the financial section, we're telling you when the next VAT payment will be. And just to be super clear, if we go to the settings, this is where you then, the VAT section, and we do have accrual and cash-based VAT systems that are properly calculating from actuals and predicted data and moving target. I had a webinar with one of our accountants this morning. He's like, I cannot believe how accurate your VAT calculations are. So yay. So if I come out of that, what we then want to look at is what's feeding into the cash flow calculation. So how are we actually getting to this point? And I know this is a whistle-stop tour, but the more you hear this, the more you will believe that this is why you need to use this tool. So all of the balances, of course, we know up until yesterday because of the balance sheet reports that we've got. We also, from a cash perspective, are looking at aggregating. So we aggregate all of the customer or supplier average payment days, their debtor and creditor days. So for every single transaction, for every creditor and supplier, for every account, all of that is aggregated so that you've got this live, moving, real payment days calculation for the cash impact of any predicted activity. Now, this is something that you even in an Excel spreadsheet, you couldn't nor wouldn't have the time to do this on a daily basis. So it's going to be the most accurate trend spotting cash impact that you'll see from that. But on top of that, we're then looking at how many the journals and spend and receive money transactions, because they're going to be on a day zero. So all of those are separated out. So every transaction has its uniqueness catered for. Then, of course, there are manual predictions as well. So if you want to create your own prediction, you can do. Why would you do that? Well, sometimes, funnily enough, we're not going to get everything right. There might be something that that we don't. Or it could be that, so if we click on any of the cells, you can see exactly how we've calculated something. And if we do a 5% increase or decrease, because we don't want to be, if you've had a 20% decrease in something, we don't want to use 20% next year. We'll knock it back down again. However, if you disagree with it, that's absolutely fine. You're going to disagree with some things. Turn it off and create your own row. All of the three-way calculations happen. All of the, sorry, if I just go and I'll do a units one, for instance. New. So all of the three-way double entry accounting postings happen. This would be, selling a new service, for instance. So we're going to do £100 and 10 of those a month. Price changes can be brought in. The VAT, of course, is calculated. And for an account with a VAT cash implication, because everything is analysed on a transaction basis, you end up with a blended VAT amount, a live one that fluctuates as well, so that's accurate. We're not just blanket putting on 20% on every single transaction. We look at them and we're looking at, and we analyse that piece. And then on the cash impact side of things, with any time that you're creating your own, you've also got flexibility for when you want the cash payment to be paid, if there's deposits, if there's payments up front, and so on and so forth. So it is so robust. But then this prediction of the numbers, like I've said, all you need to do is click on anything that you're not sure of. Oh, hold on. Let's turn my Futurely Predicts row back on again. Any of the numbers, there are no predicted cash movements on this month. The activity and the cash side of things gives you completely different explanation, as it should do. What else does it do? So we will look at period adjustments. So it'll be reflective of what we think it needs to happen. So if the accounts aren't up to date, we consider accounting discrepancies. So if, for instance, 2 months worth of rent were posted into a single month, we'll look at that, and as much as possible, we'll ensure that it's not projected going forward. COVID-19, we are looking for COVID patterns. So in your retail, your hospitality clients, we will look for those patterns, and then we will we won't just continue it next year, but we will do a phased increase. This is all being fed back all the time. So if you find, out of the 100% of accounts, 1 or 2, you're like, ooh, that could be better, just let us know. But you can of course override that as very, very quickly, like I've just shown you. We also ignore where we're not confident of predicting. So if there's really lumpy data, or there doesn't seem to be any pattern whatsoever, if it's a one-off payment, for instance, we'll do that the next year. But if it's looking really, really irregular, we'll just ignore it. But we'll also tell you that we have with this number explained. So that's a whistle-stop tour of why it absolutely is the one that you should be using. And the points that you're checking are so simple. 15 minutes, then with your client, get on the phone and just screen share and talk them through it. Say, right, we've got a problem here. What do we think? Let's just sense check the numbers. Let's go to the invoices section first. Let's sense check the numbers. What are we going to do? Are any of these going to be paid? Are they not? Do we need to exclude any? Do the same with the bills. Then scan your sales. Anything jumping out? What about the cash side of things? Focus on that first. Do we need to make any adjustments? Work through the cost of sales expenses. Jump into the financials and check through your balance sheet for things like wages and so on and so forth. You can expand that to make it look a bit bigger. So just use it as a tool, and then show them how to use it. It's that quick, no training's required, and give them this to work through, set some targets and go, right, we're going to do this, this, and this. I'm going to check in with you in a month's time, another 15-minute Zoom call. That's the basis of this new engagement with your non-compliance clients. I'm going to stop sharing and I'm going to go back to Helen now. I probably got into one of the other slides at the same time, but it was just flowing. Helen, you're muted, Helen.
Brilliant. I mean, if I had £1 for every time that's happened, I'd be very rich. Just to cover that off then, I think that was a huge amount of information in terms of how we generate our predictions. And I think the importance of coming back to the strategy of this protecting your practice is that you can trust the numbers. I think there's no point saying, yeah, you can just go off, connect all of your clients and then risk assess them if you can't trust the numbers. And these numbers are trustworthy. So get them connected. Then you can assess them. If they do use that spreadsheet, you can then get those spreadsheet columns filled out by your temp, by your junior, whoever it is you have in play, or what we have.
Or get your whole team involved for a day. Take a break. Get everyone involved.
I've had one firm that basically just signed themselves off for the entire afternoon, and they all just sat there and they took their own clients that they all knew. They sat together and they just scrolled through. They did the connections. Then they came in the next day and then they basically sat and went through each of their predict accounts for each of their individual clients, and they prioritized where they were going to start. And that prioritization is vital because Hannah touched on it then, but this is your largest chunk of clients. it is not possible for you to go, right, I'm going to solve them all today, because you just don't have time to do it. So we have to prioritize it. That spreadsheet, looking at those core metrics, will enable you to identify those that are causing you the biggest risk. Then we get in touch with them. Hannah did touch on it, but this urgent list is the ones that you need to respond to straight away. We've already said they're quite hard to engage with. So, you know, before we get into kind of the monthly sit downs with them, it's like, actually, how do you get them to pick up the phone? Well, you actually got a reason for the call this time. Before generic emails going, hey, how you're doing in COVID? Are you coping all right? Is your business struggling? Hey, here's some documents to help you in COVID. They're just not going to cut it with this sector of clients that are disengaged, you know, and it might feel like quite a tough call to say that, but they are. This has to be a really specific phone call. You know why you're ringing. You're ringing because they're a big risk. There's something that's causing that big risk. You need to talk to them about it. You've got a call to action for them to either give you a call back or for you to stay on top of it so they don't slip through the net. So make that phone call. That phone call then is to schedule that meeting that Hannah talked about. And I mean, Hannah, you went through it then, but it is just a really, really simple meeting.
It's so simple, but this is the thing. They don't need reports, management reports. This massive sector of clients, your bulk of your revenue, if you can connect with them in this way and use this as this is about shoring up your revenue, like Helen said, but crikey, it's going to give you a jump, what's the word, or something, a diving board, a launch pad. My brain is not working today. A launch pad into 2021 to actually have, you know, well, we'll come to this, profitable revenue stream from this sector of clients.
It will be. I think the urgent priority is just to make sure that you can protect as many of your compliance clients from potentially falling into those stats as you can. This method will enable you to do it in a very time-boxed manner, and I think that's the important piece. We keep saying time-boxed. You are time tight. It has to be 15 minutes this first meeting. The framework is very simple. We have it, we can share it with you, but it is just looking at those invoices and bills, looking at those sales and expenditure trends, and of course, looking at the cash impact.
You know, opportunities, threats.
Exactly.
That's it.
There is a thing, I'm going to touch on it very, very lightly. I keep going on about it, but most small businesses look for funding 3 days before they need funding. It's a stat that always makes me just shudder. I do not think that any small business should make a lending decision without your input. I feel very passionately about it because they will apply for the wrong amount. They'll have a knee jerk. They'll think they need 50 grand and actually they probably need 100 grand, but they've got 50 grand and now they can't go back and get another 50. They do the thing that they did right at the beginning when all of the bounce backs came out, where they're just applying left, right and center across the internet, and they absolutely damage their credit rating. But also they need to have some affordability calculations, need to make sure it's the right lending, etc., etc. All of the bits that you need to be part of. So that in this time box Zoom meeting, it is, if you have got clients in crisis, it is these type of conversations that you need to be having, and there will obviously be lending opportunities that will come out of it to protect them. Lastly, I'm really conscious of time actually, because we're bowling very, very quickly towards the end. I will share this recording out for everybody. We will send out any of the content that we do have, but action this now. I think that's what we think is really important. We can't tell you how to run your practice. And it's not a job. You know your practice. You are the very best at running it, but you do have to prioritize it. So, you know, as a suggestion, maybe something to consider is this Friday afternoon, those connections to predict happen. Then Monday morning, you assess what's coming in from those from those connections. Look at those risks. You know, predict is free for 7 days. This process doesn't have to cost you anything. We talked about cost at the beginning. The cost of not doing it is much greater, but actually for this immediate risk assessment, there can be no cost. We will then talk about cost with those clients that need you as a priority, and they're the ones that you start with so that you're not burdening yourself either.
And can we just to be really clear, the RRP on the website is not what you're going to pay. No. It's going to be affordable. We are not about here, you know, fleecing you, but this is about protecting your revenue. And you know what? The expenditure there will do that. It will do it, and it will generate revenue into 2021.
Completely. I'm going to stop sharing my screen because there's a couple of questions I just want to tackle. I know we're really tight on time now. For those of you that, yes.
Mark's asked a question about Xero being fully up to date. Do you know what? Ideally, of course it is. However, if it's not, and it's big red flags, you've still got the ammo to contact the client.
Yeah.
If they do not get this prioritized, and we can provide this service for you, it's going to be £100, but we're going to get, you know, or whatever it is, going to be £200. You know, you quote for it, you get the books up to date, you get them, you know, automated. But it's all about facing them with their own business. They've got to look in the mirror. You do in prioritizing your business, but so do they. Empower them, educate them. They want to survive. Their families need them to. You know, and this is what they'll prioritize if you show them this is going to be the benefit. Do you know, it's one of those things, and I'm passionate about this bookkeeping thing. So many small businesses go, what's the point? Because they don't get any value off the back of it. What's the point in a tax, you know, it's a tax return. That's why I'm doing it. It's really boring. It's, you know, I've got to do it or I'll go to jail. If you inspire them with their own business and give them this tool to help them navigate, they use it as a sat nav, right? And just like every sat nav, when you put in a new route, it'll go, there's 3 different options. Which one do you want to go for? You know, these are the sorts of conversations that you can have in this really time box manner going forward. We're not going to go into that just now, but absolutely, even if it's not reconciled, perfect. Pick up the phone.
Yeah, of course. There's still a red flag that needs a conversation. Finally, I'll just run through the chat questions because I know that we are genuinely out of time. Those who've asked me for a recording, I will share it after this. Those of you who have really kindly shared your stats, I will send you the risk calculator so you can plug it in yourselves and you can play with it. And please do send them to me because genuinely I am collating them and there's some really fascinating information that's coming out of it. And I think we can get some really good benchmarking information that of course will enable you to benchmark your own firm against it. So do send the screenshots in. I'm not showing them, they're completely anonymous. Actually did exactly the same for Australia last night and that was equally as fascinating and very, very similar. So get those in. And on that note,
we're here to help though. Yes. Like you are our priority. We will, Helen and I will prioritize. If you want us to help, the team to help, just to handhold through the right. What do we do just to get us, you know, up and running? And then you'll be off. Like Jen, you don't need any training. It's so flippin' simple. You've also got this video. You'll have this video, so you'll be able to just replay that with your team. But you know, whatever we can do to help, we want to because we're worried. You know.
And any of that can be done one-to-one. I know that the screens are quite small when we've got 2 things on. So if anybody wants to dig a little bit deeper into the product or what Hannah was showing, just let me know. Email will be out to you this afternoon. I will take this moment to say thank you very much for joining us for this power half an hour. I hope it was useful. I look forward to hearing how you all get on. And for once, put yourselves first. On that note, thanks, Hannah. Thanks, everybody. Have a lovely...
Thanks, everybody. Have a good afternoon. Cheers.